Federal Reserve cutting interest rates by 50 basis points, making a surprise announcement of a 50 basis point rate cut. The Federal Reserve saying the coronavirus poses an evolving risk to economic activity, though the fundamentals of the U.S. economy remain strong. The statement saying, in light of these risks and in support of achieving its maximum employment and price stability goals, the Fed decided to cut interest rates. Fed say it is monitoring the situation. I think it's been since January 08 or so since you had a rate cut this size, but the Federal Reserve announcing that it is cutting interest rates by 50 basis points to a new target range of 1 to 1.25%. This more or less meets the market expectation of at least a 50 basis point rate cut. There was some probabilities in the structure there of futures of a 75 basis point rate cut. That was not the greater majority probability. So the 50 basis point rate cut obviously effective immediately. And I can tell you guys that at 11 a.m. this morning, the Federal Reserve will hold a press conference, I believe headed by Fed Chairman Jay Powell, and CNBC will carry that press conference live. Once again, a 50 basis point rate cut from the Federal Reserve following that G7 meeting, guys, which pledged there would be action. And here it is. I was a little surprised that markets were disappointed. The G7 never takes action. The action is done just like this by individual central banks, individual finance ministries. This is the first action. We'll, I guess, wait to see right now if other shoes drop, including the ECB, the Bank of Japan, as well as other fiscal authorities out there. Carl?
I mean, Steve, we heard the oohs and ahs here on the floor, and immediately you saw more than 250-point Dow sell-off turn into a 300 almost point gain. We're up now about 200 points. Clearly a huge market reaction. I guess the expectation was they would do this, but it's surprising that they did it now, right? That they didn't wait for the meeting.
I'm not surprised. I think that if you pay attention to the way these things go, Sarah, and I know you do as well, that this is the way these things happen. The G7 doesn't cut rates. The G7 has no rates to cut. Individual central banks have rates to cut. What the G7 announced this morning was exactly what was expected. Very much word for word what they did during the financial crisis. If you look at the history of these things, they did a G7 meeting in the financial crisis. Rate cuts came afterwards. 9/11, they did an emergency G7 meeting. Rate cuts came afterwards. This is the process by which they go through. I think it's interesting here that whatever happened, they were able to surprise the market. I can tell you from my experience, knowing Federal Reserve officials, surprise is what they want in this case. We'll see if this surprise lasts. But the idea that they were still able to get a surprise, pardon me, after the G7 meeting was announced last night. I know some officials didn't even want the G7 meeting to be known by the market. What they wanted was a surprise G7 meeting followed by surprise rate cuts. They didn't get that. The G7 meeting leaked. It came out. The market seemed disappointed. They were still, it appears, looking at the market trading here, able to affect some form of surprise to the market. That's the way Federal Reserve officials believe these rate cuts work best, is to surprise the market.
Really quick, Steve, no dissents, I think?
No, sorry. Yes, here? Absolutely. Unanimous decision here by the Federal Reserve. Also made some tinkering that if you're interested, you can read about with the interest on excess reserves, as well as the discount rate. So they tinkered with that as well to try to help, again, grease the wheels and position the economy. And I guess one of the questions that will be asked of Jay Powell is this a permanent cut? Is it a temporary cut? Certainly, it's an attempt to resolve or diffuse the situation in the markets, provide some of the liquidity that markets seem to be needing here, and we'll see how this plays both in the market and in the banking system. I think that's going to be a clear thing for the Federal Reserve to watch.